Ethereum is exploding. It's catching the attention of major financial institutions, which are increasingly building on its blockchain, processing nearly 24 million transactions daily. The rise of tokenization and stablecoin adoption is also fueling Ethereum's momentum, pushing prices higher. This isn't random. The rally began the same day the Federal Reserve hinted at something it hasn't done in years: lowering interest rates. But this price surge isn't only about the Fed. Behind the scenes, trillions of dollars are being positioned on Ethereum's blockchain. Wall Street is building ETFs, and now the European Central Bank is considering Ethereum for the digital euro. In this video, I'll break down exactly what's happening. Some analysts, like Tom Lee, believe this is only the beginning, that Ethereum could reach $15,000 per coin by the end of this year. Many see it as the foundation of the next wave of finance, with potential to outpace Bitcoin in some areas and maybe even flip Bitcoin's market cap. Of course, not everyone agrees, and there are risks, but let's explore what's driving Ethereum's price, why it's moving now, and where it might go next. So, let's dive in. Hi, I'm Crypto Decode AI. Hope you're doing welcome for the finance. Stay for Ethereum. Full disclosure, I own Ethereum. It makes up about 5% of my portfolio, so I'm biased and have a financial interest in seeing Ethereum do well. Let's start with the biggest reason for its rise: the Federal Reserve. Recently, Jerome Powell spoke at Jackson Hole, admitting the U.S. economy is slowing down and inflation is cooling. For the first time in years, he suggested interest rates might be cut at the next FOMC meeting. To put this in perspective, the market is already betting on this outcome. Using my favorite tool, the CME FedWatch tool, we see a 75% chance rates will drop on September 17th by 0.25%, moving from 4.25 to 4.5% to 4 to 4.25%. Though a small cut, it signals a pivot. Lower interest rates pump liquidity back into financial markets, flowing first into risk assets like tech stocks, Bitcoin, and Ethereum proof. Ethereum's price spiked the same day Powell spoke, marking its strongest single-day gain in over a year. Analysts now call this the start of a new risk-on cycle. We've seen this before. Cheap money drives speculative assets higher. But Ethereum isn't as speculative as it once was. It's becoming financial infrastructure that banks, asset managers, and even governments are watching closely. If you believe Ethereum will keep rising, here's something interesting. You can gain exposure without directly buying it. The Gemini credit card offers instant crypto rewards, Ethereum, Bitcoin, XRP, and more on everyday purchases with no annual fee. You earn up to 4% back on gas, 3% on dining, 2% on groceries, and 1% on everything else. As a MasterCard World Elite, it works anywhere MasterCard is accepted, and cardholders have seen impressive returns when holding their earned crypto. Right now, Gemini offers a $200 bonus for spending $3,000 in 90 days. Sign up via the link below. Thanks to Gemini for sponsoring this segment. Back to Ethereum's rally. There are three main reasons for what's happening now. 1. Institutional demand. Institutions are buying Ethereum the same way they bought Bitcoin when spot ETFs launched. Billions have flowed into Ethereum investment products in the past month alone. This demand isn't from retail investors but from pensions, hedge funds, and retirement accounts now able to invest without hardware wallets. This steady institutional demand is powerful. 2. Stablecoin adoption. Stablecoins, digital dollars used daily in crypto, are one of Ethereum's biggest use cases. Over half of the entire stablecoin market, worth hundreds of billions, runs on Ethereum. It's effectively a global payment network, and even central banks are paying attention. The European Central Bank is considering building the digital euro on Ethereum, or possibly Solana. If chosen, Ethereum would anchor one of the world's largest financial systems. 3. Shrinking supply. Ethereum's proof-of-stake design, staking rewards, and burn mechanism reduce supply. Investors are moving coins off exchanges and into staking contracts, shrinking available supply. Exchange balances are at their lowest in nearly a decade, around 15 million ETH levels last seen in 2016. Combine that with ETF inflows and potential government adoption, and you have a supply squeeze. Less ETH available, more buyers, higher prices. Where do we go from here? Analysts are making bold predictions. Lee's strategy involves creating a treasury company for Ethereum, mirroring Michael Saylor's Bitcoin playbook: raise money, buy Ethereum, issue shares at a premium, and repeat. This could accelerate demand and price growth. If ETFs attract billions, stablecoin use continues to expand, and governments settle transactions on Ethereum, we'll see a trifecta: institutional demand, real-world utility, and reduced supply. For perspective, think of Apple before the iPhone. Back then, it was just a computer company. The App Store created an entire ecosystem, revealing Apple's true value. Ethereum could be in a similar position. Once known for experimental DeFi and NFTs, it's now being eyed by banks and central banks. If it becomes the App Store of money, $10,000 or $15,000 ETH may not be unrealistic. But let's not ignore risks. Resistance levels. If Ethereum fails to break key levels, a pullback is likely. Traders take profits, fueling volatility. Leverage. Many investors use borrowed money, making markets fragile. A sharp drop could trigger cascading liquidations. Macro risks. This rally started on mere hints of rate cuts. If inflation rises or cuts are delayed, markets could reverse quickly. Competition. Ethereum dominates DeFi and stablecoins, but isn't the fastest or cheapest blockchain. Solana remains a contender. The ECB is considering both networks for the digital euro. Here's my take. The truth is likely somewhere in between extremes. Ethereum hitting $10,000 seems realistic long-term. $15,000 is possible if conditions align perfectly. Nobody can predict exact numbers or timing. Markets move in cycles, and corrections are inevitable. The real story is Ethereum's evolution. It's no longer just an experimental blockchain. It's becoming part of global financial infrastructure. Long-term, that's what excites people, not just today's price action, but Ethereum's potential role as a foundation for future money. So, rather than trying to time short-term moves, I'll stick to my strategy. Stay invested, stay diversified, and ignore short-term noise. What do you think? Will Ethereum hold, climb to $6,000, $10,000, or $15,000 or fall back? Let me know in the comments. Have a great day, smash the like button, and subscribe for more updates. See you next week.